Okay, paying volunteers. Okay, so if you are paying volunteers, you just opened up a can of worms. Yes, you did. You just opened up a can of worms. One, this creates an employee-employer relationship. Now when you are considered the employee, now you've got all these laws, relating to employees. All right. So your minimum wage, now your minimum wage laws come into play, overtime pay laws come into play. So you have to be careful about what you're doing here, because if your volunteers find out that, you've compensated me now, and really, from a Department of Labor standpoint, usually the rule is once you compensate someone for services provided, you've created a situation where they can expect to receive compensation again if they do the same thing. All right. So you've got a situation where if you paid me to come in on Sunday to do this, I worked for 5 hours and you gave me this, I'm expecting it. If I show up next Sunday and do the same thing, you're probably going to pay me again. So, you've pretty much created an employer-employee relationship, and all of these laws applies, and you probably didn't expect that, but that's what happens when you pay somebody to work. And let's just think about this. Let's just start off and just kind of digress a little bit. What is a volunteer? Give me something in the chat. What's a volunteer? Volunteer. Come on. Sharon, Craig, somebody, Yami, Sylvia. What's a volunteer? A person's own will work, someone who does work for no pay. That's it, Craig. Boom, right there. Pays without compensation. So someone who gives their services, their job applicant. Okay, they just free labor. So that's a volunteer. If you're paying them, they're not a volunteer anymore. You're compensating them for work. You've changed the relationship. Just you saying, "Oh, I love you. Here's some money. You so good." You done changed the nature of the relationship. It's no longer a volunteer. And I know, in nonprofit ministry and in churches, we just want to do so much for the volunteers. We just want to say thank you. Got to find another way to do it without creating this, these legal ties. Okay. Okay. So, Reverend LaDonna, you noted, let's see. So in other words, should we be more clear about volunteers versus employees? Yes. A gift card. Yes, that is a form of compensation. Host a perfect, Tiffany. I love it. Yes. Host an annual volunteer banquet. That's a nice way of saying, "Oh, we just love you. Thank you so much." Have some type of certificate or a plaque or something that's non-monetary, but just says, "Ooh," or even volunteer of the month kind of a thing. You go through 12 months and or a team, which team did the best this month, which volunteer group, just ways of recognition as opposed to providing monetary rewards. Okay, very good. So what are you going to do? You're going to report the payments on a W-2. You got to do some interesting things here. You've got to, seeing that you have, usually when you pay this money to your volunteers, you've not withheld any taxes out of their pay. So we've got to go through a process of grossing up those wages so that the amount you paid them was really net pay after taxes. All right. But when you do this, again, we got more cans. You see these worms just all over the place. Yes, you're triggering 941 filing requirements. Now you got to go back and prepare, tax returns based on the dates that you issued those checks to them. And if you've already filed your quarterly 941s, now you got to go back and amend them to record all of these. I'm saying this because we've been there and done that with our clients. They've got the payroll all set up. But then we go through the year and realize, oh, wait, this person is a volunteer. Once we look at the payments and the descriptions, let's see, we see a transaction on their books and, a check payable to John Doe. And initially they don't have a description, but they have a payment for $500. And then we come back and say, okay, well, what was that payment for? And it turns out, we just gave them a love gift. Okay, well, you done opened up a can of worms. Now we got to go back and gross up the wages and go back and amend your W-2s. Yes, it's a can of worms. Yes, this event is being recorded. Let's see, where did I leave off? Let's see. So got to amend those returns. So W-2s. So here, still W-2s, whether we're doing the W-2s for our regular employees or the volunteers, or just digging up all these extra checks that were just, hiding under the carpet that we got to come to the surface and deal with. When you're issuing payroll checks, you should be withholding federal taxes, state taxes, and local taxes if they apply, Social Security taxes and Medicare taxes. If they're ministers, tax withholdings are voluntary. So if you're working for a church and you're just kind of getting in here in the system and realizing, wait a minute, now, Pastor, he or she's just getting this checks and I don't see any taxes coming out. Is that legal? Yes, give you peace of mind. Don't worry about it. It's legal. Ministers, they have what's called a dual status with the IRS. And so their tax withholdings are voluntary. So don't worry about that. On your W-2s, you have to report any taxable forms of compensation. So it's not just the regular paychecks. And so a lot of you may be working with some type of payroll service that's, keeping track of your paychecks. But you may be doing some other stuff on the side that the payroll service has no idea that you're doing it. But these extra things that you see on this list, you're going to need to go back through your records, see if any of this applies to your employees or volunteers, and, report that and have them go back and clean up your payroll for the earlier part of the year. Make sure that this gets reported on the W-2 as well as your 941. So here, cash gifts, gift cards, anything that's the same as cash, that's got to be reported. Love gifts, stipends, gas or car allowance. This has to be reported because usually gas allowances and car allowances, and I say this, what I mean by this is where a minister may receive some money just for gas or a car allowance, just some money just to go, just for gas so they can go and run errands on behalf of the organization. And so any gas or car allowances is taxable. Technically, non-cash gifts of $25 or more is taxable. Now, there's a little gray in here. If you're giving them a turkey, that's not taxable. Don't worry about that. But things of, that have some monetary value to them, technically they are taxable. Now, I'll tell you one thing we do with our clients is we watch for these things. We don't nickel and dime, these smaller amounts. We kind of let these go and focus more on the bigger items and just kind of watch for the ones that are like $100 or more. So don't sweat it. But the key thing is, try to avoid these because technically, if you're not reporting them, it could be an issue. But a lot of times it's not technically it's not noticed, but you need to know. The key thing is that you need to know. Clothing allowance. If the organization is buying the pastor's suits, especially now, if these are clothing that people can wear just in the normal course of life, out to dinner, going out to events and things like that, then that's considered personal. So those clothing allowances are personal expenses. Now, if the minister wears, I think it's called a cassock or a special, those special robes and garments that it would be inappropriate for them to wear out in public in, just normal course of life, going to the grocery store, that, that's more of a business expense, okay, and should not be taxable to the individual. If you're paying for vacations, and vacations, I mean real vacations, not where you're sending the pastor to a minister's conference. In fact, pastor's going to the minister's conference. Yeah, it might be a nice little getaway, but technically they are working. All right. But yeah, if you're sending them away for a personal vacation, then, or giving them money to go on vacation, that's taxable. Any non-qualified medical expenses, whether you're reimbursing them for health insurance or paying for out-of-pocket medical expenses, this has to go on a W-2, and I'm going to talk about that a little bit later. Group term life insurance premiums. If you have a group term policy where the benefits are $50,000 or more, then the premiums are taxable. Now, also, if you provide life insurance for the pastor and the pastor's family is a beneficiary and it's not a group term policy, let's say it's a whole life policy or some universal life policy or something like that, then all of those premiums are taxable. All right. You do if it's a policy where it's split 50 or 50, then you're going to need to if it's split 50-50, then you've got to make adjustments. Only half of that is going to be taxable. Let's see. And then employee use of vehicle. If someone in your organization, whether it's the pastor or an administrator, is driving a vehicle that is owned or leased by the organization, but they have custody of that vehicle and they can take that vehicle home and use it for personal use, that personal use of the vehicle is considered a form of compensation. And so there's a special analysis that we have to do to calculate that. And it's not just based on, let's just split the car note and the gas and the insurance. Let's just tally all that up and split it 50-50 or whatever. In fact, it's not even based on that. It's not even based on that. So, the key thing is that there's a special way of calculating that. And I know we are just we are just moving on this, but I got to tell you this little story here about this employee use of vehicle. Can I give you this story? Give me a virtual yay. Yes. Just a lesson learned that one of my pastors had. I had this one pastor that was driving, the church had acquired I think it was a Mercedes for the pastor. Now, the pastor had more than one vehicle, but the Mercedes, he would drive this Mercedes. Only time he would drive it was back and forth from home to church. So driving from home to church is considered commuter miles. And so the way when it comes time to valuing or putting, calculating the employee use of the vehicle, it's based on the value of the vehicle. All right. Not the full dollar amount, but if the vehicle costs a lot of money, then, there's a way that you assess a higher value to this. And so for this particular vehicle, I want to say annually, the annual value of this vehicle might have been about $25,000. And so when we do the calculations, we look at what's the percentage of mileage that was used for personal and commuting versus the mileage that was used for business. So this pastor puts the mileage together and it turned out 100% was all personal. And so 100% of that $25,000 was taxable for him. But here's the kicker. He only drove it from home to church. And it was only on some Sundays, not every Sunday. So the mileage he reported was under 200 miles. So the pastor drove the car only 200 miles, but because those few 200 miles were all personal, $25,000 roughly, maybe 25, had to be added to the W-2. That just hurt me so bad to have to do that. But that was the way that we had to do it. So the key thing is if you're driving a vehicle that's for, that the church has acquired or the organization has acquired, try to use it more for the purpose. Because usually that's why the organization gets it for you, so that you have it to go out and do the work for the ministry. Yes, Uber would have been cheaper. Yeah, that was a long time ago before Uber. But, the key thing is, I think you got it. The key thing is, is that the value of the vehicle was based on value of the vehicle and the use of the vehicle. Key thing is you want to use that vehicle for ministry purpose. Just used it. Well, that was the thing. He did have different cars. The thing was he thought that driving it to church was a business expense. He didn't understand that commuting, that was commuting, and that commuting is considered personal. All right. So that was the problem. He thought that it was business just to drive from home to the church. All right. Okay. So let's talk about the ministers. Ministers have a dual tax status. They're considered to be employees of the church that they attend on a regular basis and serve on a regular basis. So that means they're going to get a W-2 for starters. And then they are considered to be self-employed when it comes to the Social Security and Medicare tax. Now, if you're self-employed, if you've ever been self-employed, you know that whatever you make, you have to pay your own self-employment taxes, which is the same thing as Social Security and Medicare. And so that tax is a little bit over 15% of your pay. So as a minister, even though you're an employee, you have to pay that entire 15.3% tax. Now, if it were a regular employee, they pay, the company pays half and the employee pays half. It's 7.65%. You split that 50-50. But for the minister, they're responsible for that full tax. So you have to be careful when you're setting up your pastors. You need to be careful not to treat them as a minister. Not to treat them as a regular employee. So when you're cutting your payroll checks for your pastors, there should be nothing reported for Social Security wages, Medicare wages, Social Security taxes withheld, Medicare tax. Everything should only be wages and federal taxes withheld, if any, because we noted here, ministers can voluntarily elect to have taxes withheld. And a lot of times for the smaller churches, the pastors don't have any money coming out of that check. I'm telling you, side note, I feel like a pastor on a Sunday teaching the last service. You know how the pastor at the last service, they can just go into overtime. That's about how I feel right now. Like it's the last service. Y'all got to sit here and we just going into overtime. But anyway, because I'm just having a good time. So, amen, Craig. Okay, so the pastors can voluntarily elect. So usually with the small churches, they don't have any taxes coming out because they're not prepped to start dealing with payroll and taking out tax deductions and sending that money to the IRS and preparing 941s and things like that. So usually for a smaller church, the pastor has no taxes coming out. But once the church gets to a point where they're ready to hire other workers, and now you have to take taxes out of their checks. But when you have those other workers, now since you're taking out taxes, now you have to do 941s. So at that point, it's a good time for the pastors to say, okay, now you all can start taking taxes out of my checks. Technically, with the self-employed person, you don't have to take out taxes from their checks, but the minister has to have something in place on their end to make their own tax deposits, either having a spouse who's working full time, have enough money coming out of their checks to cover the taxes for the household, or they make estimated tax deposits. So that this is not a seminar or webinar on everything you need to know about ministers' taxes. This is just from a bookkeeper standpoint or finance administrator standpoint, what you need to know when it comes to dealing with the minister. So Kenneth, you have a question. Let's see. Do you have to take out taxes when you hire a contractor, independent contractor, or temporary help? Okay, so that's a little bit of a loaded question. So first of all, your question was, do you have to take out taxes when you hire a contractor or independent contractor or temporary help? So first of all, when it comes to the contractor or independent contractor, we got to determine whether or not they're in business. And so if you've determined that, yes, they're in business and they're a qualified independent contractor, then no, you do not take taxes out. The only time you will have to take taxes out is if they refuse to give you a W-9 The instructions on the W-9 form says if they refuse to give that to you, then you have to do a backup withholding. But I encourage you, if that comes into play, that you just let them know in advance, hey, I'm about to take out this backup withholding and there's no way you're going to get this money back until you do your tax return. But temporary help, I think we pretty much established that temporary helpers, if they're not in business, they're W-2, and yes, you need to take taxes out of their check. Anybody that's classified as an employee, with the exception of ordained ministers, you have to take taxes out of their pay. All right. So here's an example of a minister's W-2. It's just so that, if you've done payroll before, or you've seen W-2s and, you see a minister's W-2 and you wonder, okay, why is there nothing in, we've got this $38,000 in box 1, but why is there nothing in box 2? Well, that's okay for a minister because they don't have to have taxes withheld. Why is there nothing in 3, 4, 5, and 6? This is where Social Security wages, Medicare wages. For a minister, these boxes should be blank. In fact, if you see a pastor's W-2 and those boxes are filled in, that's a red flag that that pastor's pay is not being handled correctly and that someone, the payroll administrator, has classified them as a regular employee. All right. Some people like to keep things simple, but technically, we got to follow the rules that the IRS sets for us. So yeah, and I'll tell you, I had a situation where I was doing a tax return for a pastor, and he wasn't an accounting client of mine, but just doing his taxes. And it was my first year doing his taxes, and lo and behold, his church gives us a W-2 that has 3, 4, 5, and 6 filled out, and so I let him know, hey, this is not right. This is what we need to do, blah, blah, blah. And he says, well, my last tax preparer never said anything about it. I'm like, well, if they knew, first of all, did they even know that you were a minister? No. Yeah, they knew that I was a minister. They know I've been knowing I'm a minister, for many years. In fact, I had the same thing happen where we were doing the taxes. We were the accountant. And we gave a pastor, it was our first year working with the pastor, and we gave him a W-2 to look something like this. And he took it and gave it to his tax preparer. He'd been working with that tax preparer for many years, and that tax preparer knew that they were a minister. And the tax preparer goes, wait a minute, there's nothing here. What's wrong? Oh, your W-2s have been looking this way. Why, now that you got a new accountant, why'd they mess it up? No, we didn't mess it up. The other company had been doing it wrong all along. And by the way, you've been doing their taxes. You doing a tax return for a minister. You should have known better. You should know that these boxes should have been empty. So I say that because if you are a minister and your W-2s show 3, 4, 5, and 6 have numbers in there, that means that's a problem. 2, if you've been giving those W-2s to your preparer and they've never said anything about it and they know that you're a pastor, that's a problem too, because there's something special you're supposed to do on your tax return when it comes to that, if it's done that way. And so, a lot of them, they want to keep it simple. They want to claim they know pastors, how to do pastors' taxes, but they really don't. And some of them just kind of apply normal employee rules to ministers and don't really know how to handle this. Box 14 is where we report the housing allowance. And if there were any fringe benefits, those taxable fringe benefits, that would be reported on line 14 as well. But it's also part of line 1. Now, the housing is not in box 1. Okay, only the salary and other taxable fringe benefits. But we're documenting the housing because that has to be handled a special way on a pastor's tax return. So thank you, Pastor Nita, you have been giving me so many compliments. I appreciate it. What if you have been handling your pastor the wrong way and you've been taking out Social Security and Medicare taxes for your pastor? Well, you need to convert them from FICA to SECA, and I'll explain that. FICA, you may have heard the term FICA. That's when you withhold Social Security taxes and Medicare taxes, just like you do with employees. Okay, that's FICA. SECA is for self-employed. Kind of see that SE, just think self-employed. So that's where the self-employed persons contribute toward Social Security and Medicare taxes. So one, and I know this is probably like way over your head, but this is just to kind of let you know or give you a heads up as to if we get involved in this and have to clean this up for you, this is what needs to be done. One, the FICA payments need to be reclassified to federal taxes withheld. You need to, if the employer, how the employer matches and pays half of that Social Security tax, well, that has to be reported as taxable income to the pastor. So we got to tack that on, add that to the gross wages. And then we got to go back and amend the prior payroll returns that are prepared, because that pastor's pay has been part of those FICA calculations all along on those W-2. So that's got to get amended. And then we've got to, just kind of test out the numbers and make sure that everything's right. So that kind of thing, I say, hey, seek a professional to help you work through that. A lot of times the clients that we work with the first time around, that's the issue, that even clients where they set where they're using a third-party payroll service like ADP or either Paychecks or something like that, where the pastor was just added to payroll, but nobody really raised the red flag for the payroll persons to make sure that the pastor was set up correctly as a minister. And so, for years, they've got, treating them like a regular employee and didn't make the appropriate adjustments for, to treat them as a minister. Okay, let's see. We got a question. A pastor that receives only a housing allowance, so I leave the black. Well, we're going to hit that. Do you give a W-2 to a pastor who's only giving them housing? Okay, yeah, we're going to hit that. So 2 questions, Sylvia, and I couldn't see who the other person was, but yeah, we're going to touch on that. Here's another special issue that tends to come up. What about the payments to the volunteers? How do we deal with that? So here's an example. A volunteer receives a $100 love gift. What are we going to do? We're going to report $108.28 as gross. Okay, we're doing what we call a gross up. We're increasing the gross and treating it as though we calculate what was the correct amount for Social Security to come out and Medicare come out, and calculate this so that the net pay ends up being the $100. So we're kind of backing into this. And so when they get a W-2, it's going to show gross wages of $108 and Medicare taxes and state and Social Security taxes, Social Security and Medicare taxes withheld. And usually in situations like this, we don't bother calculating state income tax withholdings or federal tax withholdings. They'll get a W-2 with the extra compensation reported, and if there's any extra taxes due, they'll pay that when they file their taxes. Usually this little bit of pay does not make a big impact on their tax return. In fact, if they're in the lowest tax bracket of 10%, they're only going to pay $10 in federal taxes on it, and maybe $5 in 5% in state income taxes, depending on your. So it's not going to break the bank. It's not going to break the bank, or really cause problems with their tax returns, depending on how much. Let's see. I thought I had a slide. Let me deal with the housing allowance. I thought I had a slide in here for the housing allowance. If the pastor only receives a housing allowance, you're going to give them a memo. Oh, let me backtrack. First of all, the IRS does not allow you to issue a W-2 where there's nothing in box 1. All right, that's number 1. So you can't give them a W-2 with no wages. And then also you can't have a situation where the pastor wants you to withhold taxes off of the housing. Sure, there's going to be could be taxes associated with the housing, but if there's nothing in box 1, then you can't take any taxes out. So you can't have just an amount in box 2 and nothing in box 1. And so with regard to the housing, here's what we do. We have the client send a letter in fact, we actually prepare the letter for our clients. We send them a letter that says, okay, this is the total housing that you received. You need to know that this could be housing allowance. You're not going to pay federal and state income taxes on it, but you're going to pay Social Security and Medicare taxes. So make sure that you give this to your preparer and that they factor this in on your tax return. So got a little letter we write up and have them have two people from the church sign off on that. And so that's a nice statement that the pastor can retain, not only for tax purposes, but if they're applying for financing and need to prove their income, they now have something that they can use for that. Okay. Good questions. Thank you so much, Sylvia, for giving me that question, and the other person who I can't see their name. That was the Holy Ghost. Let's see. Okay, so the or Affordable Care Act, and I'm almost done. I tell you, I'm almost at the end, just so you know. Okay, so the individual mandate, as we know, was just recently repealed. So that basically means that individuals are not obligated to have health insurance, but all of those other real rules associated with the Affordable Care Act still apply. And I'm going to talk about that on the next slide. But that individual mandate is not effective until 2019. So for 2018, you're still required to have health insurance. So how does the Affordable Care Act affect employers? And I'm going to kind of just walk you through how this evolved and how simple it should be, but how complex it became. So for starters, you have this scenario where you have a worker or a pastor working for the church, and the church, doesn't provide health insurance, or they don't have group term coverage, a group policy, because maybe it's only the pastor that's working for the church. And so here's the situation. So the pastor usually goes out, buy their own insurance. And so the employer may pay the premiums, and they may even reimburse them for not only the premiums, but some out-of-pocket expenses. And so before the Affordable Care Act, that was fine. Great. No problems at all. Sure. Health expenses, you're covering insurance, reimbursing for premiums. No problem. It's non-taxable. Do as much as you want, that's fine. But up come 2014, the Affordable Care Act kicks in. After that, if the employer is reimbursing the employee for health coverage, then it violates the Affordable Care Act, because the requirements of the Affordable Care Act is that the employee is supposed to, the individual that owns the policy is supposed to pay the policy. If the employer has group coverage, then the employer pays for that. But the employer should not be paying for an individual policy. All right. So when you reimburse the employee for their health insurance, that becomes that violates the Affordable Care Act, and it still violates, even with that little individual mandate that has nothing to do with this. This is still in play. All right. So organizations, and this is not just churches, this is businesses in general. Okay. They're subject to a penalty of $100 per day per employee. And so, yes, that means you could have a penalty of up to $36,500 a year per employee. All right. Now, there is one exception where if you have only one employee, you can do this. But guess what happens when you got the pastor or a CEO of the organization that you have this arrangement with, where you're reimbursing them. But lo and behold, you now have to issue these W-2s because you didn't pay these volunteers some compensation, a love gift. You've created another employee-employer relationship. So now you have another employee. You no longer have that freedom or liberty that you had with if it's only one employee, where you can get away with it. But now that you've added this other employee, again, you do I have to go to the slide where it had the can of worms again? So you open up another can of worms and you got a problem here, because now, you have 2 or more employees, and now that arrangement is violating the Affordable Care Act. Also, it's taxable. Okay, it's taxable compensation for the individual. So there was a lot of kicking and screaming going on about that. So what Obama did in 2016, he came up with this 21st, or Congress came up with this 21st Century Cures Act. And now this was, they did it in December of 2016, but it's effective for 2017. Now, it doesn't necessarily say that all of this stuff, that I had on that previous slide, doesn't come into play. But they came up with a loophole for you, per se, that if you set up a qualified small employer health reimbursement arrangement, then you can do a little something for your workers. Okay. So as long as you have less than 50 employees, now, here's the thing. Whenever Congress comes up with something, there's a lot of little red tape, loopholes, rules, guidelines, and everything that you have to follow. So number one, the first, you have to have fewer than 50 employees. 2, you have to offer the same terms to all the employees. So you can't favor one employee over the next. Now, I can't speak to you as to whether or not those same terms apply to full-time, part-time employees, or even volunteers, for lack of a better term. But the key thing is, see, if you if you start paying your volunteers, they're in that employee group, and now you can, and you're not giving them these same benefits. Now you could be violating this little arrangement that you done came up with. So watch that. So you have to allow the same amount per employee. And the maximum benefit that you can give is up to $4,950 per employee, or $10,000 per family. And so now with you having this arrangement, it's non-taxable for the employee. And so now you can reimburse them for their expenses, or reimburse them for insurance, or pay those premiums, as long as it's within the amounts, and you level the playing field, and what you do for one, you do for everyone else. All right. So here's the thing. It has to be a formal document. You can't just, go out today and say, oh, Belinda said we can start doing $4,950 for benefits for health. No, you have to have a formal plan document. It's subject to rules. And if you break the rules, the plan is no longer it's no longer a qualified plan. Okay, because you're not following the rules, so it's not qualified anymore. So that's where, we mentioned that situation. You've added more employees, because now you're paying your volunteers. They're no longer free. They're paid workers. So what you do for one, you have to do for the others. And if you're not doing it for the volunteers, you could very well be breaking that document, that plan agreement. So you know what I mean? Okay. So the key thing is that I want to mention here is that you want to get this plan set up by a benefits specialist. And if you need the information for the specialist, then be sure to, be sure to, you want to be sure to reach out to me, and I will give you that, a contact person that can take care of that for you. All right. So let's see. Next, action items for 2018. Use a payroll service or an app to keep up with your payroll. That's going to help you track your paychecks and your tax withholding. So we're taking things up a notch from trying to keep up with this stuff in Excel. We want to make sure that we're setting up the clergy pay, their compensation and tax withholdings correctly. We also talked about finding alternative ways to show our appreciation for volunteers. And if we want to do something to help our employees out with some type of health benefits, we want to set up a qualified plan. Let's see. Now, Ronnie, you gave us a question. Ronnie in AZ benefits gifts Ronnie in Arizona. Benefits gifts less than $600 are not subject to 1099 or W-2, whereas love gift stipends. No, this is a different story. This was a gift. First of all, benevolence is not taxable. Benevolence, no matter what it is that you give, that's not taxable. What I was referring to was a gift that you give to a member, not a volunteer. Now, I understand volunteers are also members of your church, but if, let's say, for example, there's a special couple in your ministry, they get married, and the church just wants to bless them with $1,000 towards their honeymoon. Well, that you're going to have to report on a 1099. Now, let's say this couple, they are not volunteers. It's just something that the church wants to do. Just bless them because they've just been part of your ministry for a long time, or they, for whatever reason. So that's going to get reported on the 1099. But compensation for services rendered that you're paying to a volunteer, if a volunteer is working and you're paying them, no matter what the amount is, you should be reporting that on a W-2. Okay, the $600 amount does not come into play when it refers to compensation that has to go on a W-2. All right, so the first thing you want to think about is, does this qualify as 1099 or is it in the W-2 pool? If it qualifies as a 1099, then it's on the the $600 rule applies. Okay, if it's on a W-2, there's no $600 rule at all. Okay. Let's see. I want to just make sure I got it. Love gift stipends, they're subject to W-2 no matter what the amount. Ronnie, did I answer your question? Okay. And next action item, you want to switch to 944 filings. Okay. If your organization is small and you're doing not so much small, but if your annual tax liability is under $1,000 and you're filing 941s, you can actually switch over and be a 944 filer. This is where you can, instead of filing quarterly 941s, you can just file one 944 form and make that a lot easier on you. But what you have to do is first file all your 941s. Make sure you get all your 941s in for 2017. Get them in on time. And then you can call the IRS at this 800 number that's on the slide. By this deadline, and I'd suggest doing it maybe a couple of weeks before. But the key thing is make sure that the IRS has had ample time to process your 941. So you don't want a situation where you're just catching up and doing 941s on March 31st and dropping them in the mail, and then you call the IRS on April 2nd and try to get this. The IRS has not had ample time to process those 941s. And so you'd probably be denied. So when you call the IRS, they're going to take your request over the phone, but that doesn't necessarily mean that they've granted it. They're going to submit it, but then somebody's going to review your filing history and confirm your 941 filing history, take a look at those tax liabilities and confirm that it's been under $1,000. And so your 944 annual filing status is only going to be effective when you receive that confirmation letter from the Internal Revenue Service. Okay. So the key thing, just to recap what we've been talking about this whole meeting, 1099s, get them mailed to the IRS before or on or before the January 31st date. Same thing for the W-2s. They have to be postmarked. Long time ago, we'd have that extra month where we can get them out on, February 28th. But as of last year was our first year where we had January 31st was our deadline. So not only do you have to get them out to the recipients, your employees and your independent contractors, but you also have to get them out the door and postmarked for the IRS and for the Social Security Administration. Otherwise, you could be penalized for late filings. And then also January 31st is the deadline to file your fourth quarter 941 or either your annual 944. And so here I got the nerve to put up questions and answers. We have gone over all of our questions, a lot of our questions throughout the webinar, and it was awesome. But I'm going to leave the floor open, or the chat area open, so that if you have additional questions, let's go ahead and submit those questions. And in fact, while I am, can you please put up the last slide? I trust that means not the question and answer, but that one there. And let's see, there was a question that someone submitted to me by email. Let me get that one out. I think it was Tiffany that, nope, Tilford, Kitty. Okay, so let's see. Now that the standard deduction, church, I think, let's see, first of all, you wanted to make a recommendation for a church financial management system. I encourage, this is from Tilford Kitty. Can you recommend a church financial management system? You're currently using Quicken. I recommend QuickBooks for that. Now, I'll tell you this. I recommend that you have two software programs. One, an accounting program, a really good accounting program, and that's QuickBooks, or either QuickBooks Online. In fact, I love QuickBooks Online. But also, you're going to have a church management software. And so that Icon CMS, that's going to be your church management software. That's where you're going to keep track of all of your members' contributions, their names and addresses and things like that, and crank out those contribution statements. So definitely do that. And then also do the financial program to keep track of the financials. Just in my experience, the QuickBooks, that program, and even Sage 50, it's all focused on accounting, whereas the church management programs, usually what I've found is that they do a really good job at designing their church management component, and then they throw in the accounting piece. Some of them may have really good accounting components with them, but others, it's usually just a little something to keep up with the finances. They're not as robust as the QuickBooks application. So that's why I say use a really robust accounting program. You indicate that you have less than 200 members. Still, you're not considered small. I mean, people will tell you, hey, if you've passed 50 members, you're a pretty decent sized church. So you're a good prospect for doing the accounting program as well as the church management program. Let me get back to the questions here. Church management program. Actually, I don't have a preference. I used to recommend Membership Plus, but because it was really inexpensive. There is a program, if you're on a tight budget, Members Boss. And I'm going to tell you, it's hard to find online because they just didn't do a good job with their the way they designed their website. But I do have a link for a very inexpensive one. But just do a Google search. I mean, I suggest that you spend the money on the technology that you're actually going to use. If you're only going to use your church management program just to keep track of the contributions and that's it, then get something inexpensive. But there are lots of other programs out there that are more web-based, more dynamic, and they are designed to help you build your organization and develop good relationships through social media and email marketing. And so if you are, if you're poised to where you have the support where someone can learn those applications and learn how to maximize on those, then I say go ahead, make that investment in the other type of applications. Realm is one that comes to mind. That one is the one that replaced Membership Plus. But I'll tell you this, the online applications They're going to be loaded with features. You should be able to accept online donations, and people should be able to log in and download their contribution statements and even set up recurring donations. So you want to take advantage of that because, in this day and age, people expect you to make it convenient for them to give. And if it's inconvenient, then the money just kind of slows down. So make it as convenient as you can for the donors. And that's where the online access is going to be a big help. But usually those applications do come with a subscription. Okay. If any of you are currently using a church management software that you absolutely love, if you can, just put it in the chat box, and I'd like to share it with the other listeners. Okay, our contributions entitled Pastor's Love Offerings given monthly by multiple members and received by the clergy considered taxable. Absolutely. Here's the thing. The pastor is receiving the money. And why are they receiving it? They're receiving it for services rendered as the pastor. So that is taxable compensation. All right. I think the real question is whether or not those donations are tax deductible for the donor. Because that money, when you receive a donation and that money is designated to a specific individual, then now the individual who made the contribution cannot get that money, is not tax deductible for the donor. Now the pastor is going to have to pay taxes on that, but the donation is not tax deductible to the recipient. Okay. Okay, Brett, I hope that I answered your question there. And let's see, yeah, a few people asked about church management software. Let's see, if using an e-postcard, do you need to do 1099s or W-2s? The e-postcard, I believe that you're referring to the 990N filing that nonprofits have to do. Let's see, who is that? That's Azaniah. Azaniah, if that's what you're referring to, those are two completely different things. The 990N e-postcard has to do with the organization, the nonprofit organization, which is not a church, because churches don't do 990s, okay? But the organization that's them, the organization filing their own tax return. The 1099s and the W-2s are what we refer to as informational returns. And this is where you or your organization, the payer, are reporting to the IRS what these other individuals received, whether they be independent contractors or employees. So your 1099s and W-2s are things that these individuals who receive this pay need to get in order to prepare their tax return. So just because you file a 990N, that does not exempt you from the informational reporting that you have to do to the recipients of the money. Okay. Very good question. Let's see. CHMS Breeze I've been using for, okay, this is an application that someone's using. CHMS Breeze been using for 6 months so far. We love it. It's $50 a month online. Okay. Power Church software may be a consideration. That's from Brett. Let's see. TechSoup has great discounts for nonprofit organizations. Thank you, Wanda. Yeah, be sure to check out or Google search Tech TechSoup. As a nonprofit organization, if you register with them and show them I believe you have to show your 501c3 letter. But you can get some really good discounts on software. So that's where you can get your Microsoft Office applications, your Adobe software. They have a lot of software. So Wanda, do they also have church? I'm wondering if they have church management or donor management software offered through TechSoup. If you can respond to that, that'd be great. any others on church management software, or even just any kind of donor management software. If you can recommend that, that would be great. Okay, just looking for some more questions. If we don't have any other questions, then we are going to call it a wrap. It has been such an awesome privilege to serve you. Let's just see if I meant to give you my link if you need any support. Obviously, our organization, our company, we help churches and nonprofit organizations stay in compliance with IRS guidelines. If the information that I shared with you was informational but still kind of a bit overwhelming, or your church is at a size where you feel that you need some professional oversight to help make sure you stay in compliance, then be sure to reach out to me. You will receive an email with a link to rewatch the webinar replay, as well as the slides. But yeah, so you'll have my contact information, and you'll be able to just kind of reply back, or even just reply to me from the emails that you've received from me so far announcing the webinar. And I can share with you on how you can schedule a strategy session with me, and we can just, address your needs, discuss, the issues that you're having, and come up with a game plan for you. It has been a privilege serving you. Just checking, checking here. Thank you. Wonderful webinar. Thank you so much. I really appreciate it. Awesome. And yeah, someone mentioned that they're using QuickBooks. Yeah, you can Jimmy rig QuickBooks to be your, to serve as your contribution management system, but you have to kind of design those statements so that they comply with the IRS's guidelines. Thank you all so much for the applause. I really appreciate it. God bless you. It has been such a privilege serving you, and you all have a wonderful, wonderful day. I hope this information was helpful. Now, if you have a question, please leave it in the comments. And if you'd like to get more tips, be sure to subscribe to our channel. At Whitfield & Associates, we're here to help you get organized, get in compliance, and get control of your finances. So be sure to visit our website at churchcpa.com. Thank you, and have a blessed day.